Class, Mr. Goyette with National University Academy coming back to you for economics. We're going over chapter 14, and just wanted to go over some terms with you. Now, my good quality webcam, I think I left it at the Lakeside site, so I don't have it with me. I'm going to try to focus in on these key terms and concepts for you. If not, I will, of course, say them out loud as I'm focusing in on them. So if you don't see them well, given the quality of this webcam or the lack of quality of this webcam, just listen to my voice and jot them down. Again, this is all going to be covered from actual chapter 14 and 15, with an emphasis now on chapter 15. So let's kick right off here. Hopefully you can. I don't think the resolution's all that great for this camera. Something about the brightness, so I have to fix that. But what we have here, if you can make it out at all, which I don't think you can, is Economics Unit 7, Vocabulary and Topics to Review for a Unit 7 quiz. We have prime interest rate. Fix this on the fly here. There we go. Okay, now you can probably see that a little bit better. Economics Unit 7, prime interest rate, sales tax, property tax, income tax, proportional tax, or flat tax, regressive tax, tax incentives, national debt, and the essay question will ask you to distinguish between supply side and demand side economics. Now, my little note to you over here on the side is, you can read that, it says, recognize the connection these terms have to, that should be your personal finances, not you personal finances. But anyway, let's get right off here and we'll get into the terms you'll need to know. So now that all the light was on that, now I'm dark, but no one needs to see me anyway. I can be the man in the shadows. So basically, what we're going to talk about is these themes in chapter 14 and 15, and these key terms. And I wanted to go over for you, we just finished reading up about the Panic of 1907, and I want to go over, let's see here, corporate tax and property tax really quick, because both of these will be mentioned in the quiz. Corporate income tax in the United States, governments tax corporate profits. Many corporations pay taxes at reduced rates because they are eligible for tax breaks, such as those designed to promote plant modernization. In 1996, corporate income taxes made up about 10% of the federal tax revenues, about 3% of the state tax revenues, and only about a third of 1% of local tax revenues. Property taxes. Now this question will definitely be on the quiz, so perk up your ears. Property taxes. State and local governments also rely on property taxes. Most property taxes apply to houses, factory buildings, condominiums, the land on which these structures are built, and undeveloped real estate holdings. Some states also collect taxes on personal property such as household furnishings, boats, and jewelry. Local governments rely on property taxes to finance needs such as education, police, fire protection, and sanitation. Sales tax. As sales tax is a regressive tax assigned to certain goods and services by state and local governments, sale taxes are regressive because generally they apply only to basic consumer spending and therefore take a larger percentage of lower incomes. Although the amount of tax paid on items is the same for people with higher or lower incomes, the amount is a greater percentage of the lower income than of that of higher income. Additional sales taxes do not apply to many higher cost items such as houses or to services such as attorney's fees. So that's an important part. Now notice they mentioned two terms in there, regressive taxes, and we're going to talk about regressive versus progressive taxes. So let me hit that for a second. Now, you saw proportional tax was on the board, so let me talk about that. Now, you might have heard of Forbes magazine. It's an economist magazine, a money market magazine that goes over the economy, stock market, economic affairs. And Forbes, when he ran for president, was in favor of the flat tax, and not knowing his platform all that articulately, I'm not going to try to encapsulate it for you, but he was in favor of having a national proportional tax. And some states have proportional taxes. They're also called flat rate taxes. A proportional tax takes the same percentage of the income from individuals at all income levels. To understand how this type of tax affects taxpayers, suppose that the state has a 5% proportional tax on income. Nathan Lewis earns, here's Nathan Lewis, he earns $100,000 per year. He pays $5,000 in taxes. That's because if you take $100,000, multiply it or times it by 0.05, you get $5,000. Now Stephanie, she earns $10,000 per year and pays the same 5% rate, or $500. That's 10 times 0.05, which equals $500. Now, although the tax burden appears to fall equally on all taxpayers, it is probably easier for Nathan to pay the 5% tax than it is for Stephanie. Proportional taxes, therefore, have a greater impact on people with lower incomes. Now, proportional or flat taxes can be a controversial issue. Taxes are, period. Our history in the United States, no taxation without representation, the Whiskey Rebellion, and all the ruckus that we've caused over taxes has been largely because we are people that want to know that if we're going to be taxed at all, it better be going for something that we're going to get our money's worth out of it. Many Americans, if they had it their way, would probably do away with the tax system. Although getting into why or why not that is the case, you'd have to do your own research. I won't go there now. Progressive taxes. A progressive tax takes a larger percentage of income from a high-income person than from a lower-income person. Currently, the main progressive tax in the United States is the federal income tax. That's going to be a question on the quiz. Under current income tax laws, there are different tax rates for people with different levels of income. For example, in 2000, a person with a taxable annual income of $26,250 or less fell into the 15% tax bracket or category. Those individuals who had a taxable income of more than $288,350 were in the highest tax bracket, that is 39.6%. These tax brackets cause the burden of the federal income tax to fall more heavily on people with high incomes than on people with low incomes. In addition, income below a certain level is not taxed at all. Regressive tax. A regressive tax takes a larger percentage of income from people with lower incomes than from people with high incomes. Sales taxes are one kind of regressive tax. Sales tax is levied on the sale of some goods or services. So let's see, I think we covered most of the things we wanted to cover there. Supply side and demand side. I'm going to pause here because I don't want to go over the 10 minutes. So I'm going to pause it here, then we're going to come back with some information on supply side and demand side economics, because you're going to need to compare and contrast those. So again, what are your terms you want to look at when you're reviewing chapter 15? You want to take a look at progressive tax, national debt, tax incentives, property tax, prime interest rate, which I'll also talk about in a few minutes, and so forth and so on. Okay, I'll be right back with you in a moment.